Good evening and welcome to the Australian Stock Market Show. We do hope you've had a great week so far. George Bernard said, "Beware of false knowledge. It is more dangerous than ignorance. Surf the web and it will only take you a few seconds to find plenty of false knowledge around the stock market." Tonight we'll fix as much of that as we can as we answer your questions and bring you our upfront no BS approach to all things stock market. Our main topic for tonight is top banking stocks, best Australian banks for growth and income. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Hello.
How you doing?
Great, and you?
Me, I'm having a fantastic time.
You are?
I'm excited about tonight's show.
You're excited about all the stocks we've got to talk about tonight.
We're going to be talking about analyse, one I mentioned in my hot stocks about 2 months ago, and we've got Life 360 we're talking about, which is one I talked about 4 months ago, probably, maybe 5 months ago.
These people must have ESP then with you.
They must. And Appam's the other one we've been chatting about that was not yet ready. So I reckon there could be some interesting chats we're going to have tonight.
So what are your thoughts on the overall market at the moment?
You'll have to wait for the show.
Really?
Yeah, you've got to wait like everybody else. I'm not telling you yet.
Oh, jeez.
All right, well, before we get into our first segment for tonight, again, we'll take some live calls on the show. So if you do want to chat to Janine and I and ask us a question, then this is your opportunity to pick up your phone and call us now. Now, the number you need to call is 039290 9988. That's 03 for Melbourne, 92909988. And to get things started, the first person to call into the show right now will get a free copy of my latest book. Janine, I know you and I are keen to chat, so hopefully everybody gets to pick up their phone and get dialing now.
While we wait for you to call, it is the second Tuesday in the month, and this means we take a look at the sectors in the Australian stock market. So let's get into the charts.
Okay, on the screen we've got the watch list of all the sectors in the Australian market, and that's, you've got it on weekly. Is it weekly or yearly or monthly? I don't know, I can't tell.
It's on yearly.
I've got to put my glasses on.
Can't you see the big returns?
Oh yeah,
if that was weekly.
If that was a weekly return, we'd all be excited, wouldn't we?
Yep, okay, so financials is at the top of the list. The code for that is XFJ, and you can see up 24.8%, so financials have done incredibly well. That's banks, insurance, real estate in there. Consumer discretionary is another one that's done really well. So we hope that consumer discretionary spending continues to go well through the festive season. That'll be good for our stock market and the economy. Up 24.7% there. I'll jump down to communication services. That's XTJ, up 24.47%. Wow, what do you make of that?
So they're the three sectors that have performed the best. They're really the ones that push the market up to that return of 13.2%.
Yep. So, okay, Telstra's in there for communications. That's doing well. Australian All Ordinaries Index is up 13.22%, which is actually a good return for our market. And healthcare is actually doing quite well and sitting in line with what the stock market's doing. CSL obviously is a big driver for the healthcare sector, being a heavyweight. And industrials. It's nice to see industrials up almost 10%. That's fantastic to see. That's a big driver of the market as well, and not in terms of weight, but just in terms of the theme of the market. So consumer staples, we're seeing there. Now Woolies and Coles. So 7.89%. We have seen them come off the boil a little bit, but I still think this sector's a good one going forward. I think that the market's got the perception as people go out and they eat more in cafes and restaurants that Coles and Woolies will be down, but I'm not so convinced by that.
Convinced of that.
Because a lot of people were ordering takeaway during COVID.
They got used to it. Menu log and all the other...
Well, look at Domino's.
Domino's
did incredibly well.
Well, Domino's did well last week.
So, I mean, it's a bit of a problem if people eat too much pizza.
Well, that's true too. Yeah, I don't eat pizza at all. I'm not allowed it.
It blocks you up, doesn't it?
It just blocks you up. But you're right.
Information technology up 5.9% there, and still doing reasonably well, around 6%. Energy is actually still the laggard, but it's in the green for the year so far, 3.6% up. Materials we've actually seen down. Now, you know, the big miners are still down. We haven't seen a rebound there yet, and there is a risk to the downside in the short term. Minus 3.65% there on the materials side of things. Utilities is at the bottom of the ladder, and we've seen, you know, AGL and there's other stocks at the bottom of the utilities sector being pulling that whole sector down. But these could be the ones to watch going forward, the ones at the bottom of the list.
Yeah, and I've been saying that for a little while, because obviously finance is up 24.83%. The market's been held back because materials is down 3.65%. Last week you had them both basically flat for the week, and yet the market went up. So the market was being driven sort of by mid caps and lower caps, and that's a little bit of a concerning sign to me, because normally when they're driving the market, that means the market's is peaking and it'll start to fall away. But it's not conclusive just yet.
No, because we have seen that before, and then the market continued to go.
1 week doesn't make a sheep station, basically. That's right. So it's not conclusive yet. But you wouldn't think financials would do 25% next year. No. But you would think materials possibly would.
I'd still expect them to do at least high single digits and possibly low double digit. But let's have a look at what's happening on the weekly basis there for the sectors. A totally different picture there for the week. It's early days at this point, so let's have a look at the month. We're up 3.3% there for the industrial sector. So industrials is actually leading for the month. That's good. I like to see that. And healthcare is up as well, 3%, because, I mean, healthcare tends to be more defensive, which is great. Communication services up 2.75%. So there's some consistency on that leaders board. Top three, it's still in the top three for the month. Consumer discretionary, 2.57%, not far behind. And then consumer staples, up 2.56%. Yeah. We can see materials, utilities, and the index as a whole, we've got 1.53% for the index. Materials is actually doing a little bit better. And then at the bottom, we can see energy and financials in the negative, in the red.
I think energy is going to do much better next year, I think, as we open up. I think it's been hit because of the lockdowns and stuff, but hey.
Yeah, oil's taken off.
Very much so, but I think that's it for the sectors, isn't it?
All right, that's it. Yes, you're right. From us on the sectors on the Australian market. So now it's time to get into our first email for the night.
All right, our first email tonight is from Nick, who says, "Hi Janine and Dale, I'm currently doing your course and up to module 3. Now I do already hold stock after reading your book, and all of the stocks are in the top 20 on the ASX. Now recently I saw a financial advisor when I mentioned most of my investments were in the top 20 on the ASX stock. They recommended against this with diversity as the justification regards Nick." It's a really interesting one. I mean, and Nick's obviously read the book and he understands what diversification means. And I would even suggest that he would know more about diversification than most financial advisors, because their view of diversification is quite different than what an individual should have, because they're looking at the big end of town who diversify over lots of stocks rather than a more concentrated portfolio.
I mean, I guess I disagree with you in one sense, that the financial advisors do know more about diversification in the sense of...
But they don't know how to do it properly.
The modern portfolio theory. Okay, but in terms of diversification, what the risk is in doing that, we saw in the GFC, when you have those major corrections, did that diversification really protect people? Because if they invested overseas... It didn't protect the financial advisors and the portfolios they were managing. Yeah. And they're assuming, and their take on modern portfolio theory is wrong. It really is wrong. Even the people, Markowitz, who designed modern portfolio theory, come out and said it's wrong. Right. So he's already come out and said it doesn't work that well, but they still follow that because they say diversify into unrelated markets, not within a market. You don't buy more and more shares. There's only two types of risk, which I talk about in my book. Yeah. And so having a concentrated portfolio, but also the advisor assumes that the person doesn't have a stop loss on their stocks, which then takes a lot of the risk out of it. But do they do that? Do they practice that with their clients generally?
No, they don't. And that's the point. As I said, he would know more about diversification than the advisor would, because it's being an actively managed portfolio, whereas just buying 20 or 30 or 40 stocks and sitting in there buy and hold doesn't get the great returns.
So are you saying that you don't believe in diversifying across the different asset classes?
Yeah, I do, but not within asset classes. Like people sometimes think, well, I'm going to invest overseas for diversification. That's not diversification, because if you go stocks in overseas, there's stocks here.
That's right. That's what I agree with you on that regard. But in terms of diversification across different asset classes, I think the advisors know a lot about that.
Yeah, cool. All right, so mate, just read what's in the book again and follow that, and you'll be fine. Now we've got a caller on the line. Is it Peter there?
Yes, I am.
Peter, thank you for joining our show. Where are you from?
Peter is from Sydney.
Oh, fantastic. I wish
Hello,
I was
Dale.
up there.
How are you?
Very, very good. I wish I could come up and visit you, but they won't let me out of the state, mate, so sorry about that. But do you have a question for us
sorry,
tonight?
maybe...
Yeah? Go ahead.
Maybe one day I will ride a motorbike down there and we will go for a ride together.
Yeah, we'll go for a ride through the hills, down to the Yarra Valley, drink some wine.
Yes, I do have...
Cool. So what's your question for us, Peter?
Wonderful. My question is quite easy. ANZ. ANZ. I am a low investor in holdings larger, sometimes smaller. Generally, it's long term. I'm curious about your view of what's the future for ANZ in a short term and long term, please. So
you've got ANZ and you're looking towards the long term future of that stock, correct?
That's correct.
Okay, cool. Yeah, we're going to cover this a lot in our main topic, so I think Janine will probably give you a little quick summary right now. Okay, Peter?
In short, we like ANZ. We will go into it in a lot of detail for you in the topic for tonight.
Wonderful.
It's just trading sideways at the moment. It may come back a bit, but long term we like it. So there you go. All right. Fantastic.
That's a short answer, isn't it?
That
but we'll give you more during the main topic.
From me.
Cool.
Our next email we have is from Sahib. Hello, Dale and Janine. Absolutely love the show and can't wait to watch it each week. My question today is about Atomos. It has currently pulled back about 25% and seems like a good buying opportunity once it has stopped falling and has confirmed that it is going up again. I don't currently own it, but I'm interested in it after it has pulled back. Where can you see the stock going in the short or medium term? Thanks. Okay, good question.
It is a good question, isn't it?
And one that's right up your alley because you really like this one.
Yeah, it's a little bit more of a smaller stock, and this is one of the hot stocks that we had a couple of months ago, or hot stock picks that we talked about a month ago. But really, it is, it hasn't got a lot of history, which I know, you like a lot more history. So we've only got back to about 2018. So, but it got up to there at $1.78, which is pretty close to these highs at 181 and 182. So it's got a bit of resistance through there. So it's just coming back, and you can see the normal momentum that it's on. It's just coming back to that. It could come back a little bit further, but it's, I'd say wait for another few more weeks to see where it really does go. But I do like this stock. It's a great Australian company in building stuff for the film and television industry.
That rise,
it's just beautiful, isn't it?
Yeah,
so it's just a little bit too early. I just sit back and wait for it a little bit to make sure it does find some support. It may drop down to sort of $1.10 in that sort of range into this sort of area through here. But I think right now, this is only 2 days, so it's not enough to get me excited at the moment. Where it finishes on the week, if it does finish high, then we may take off up a little bit more, but it's going to get some of that resistance around that $1.80. Is there anything else you want to add to it all? Or?
I think that you did beautifully.
Oh, okay, cool. I'll shut up now, hey?
All right, we have another caller on the line. Nathan, hello, how are you tonight? Welcome to the show.
I'm well, thanks. How are you?
Oh, there you are. We have got you. Good to hear from you. I'm glad to hear that you're doing well. What's your question for tonight?
I think he's mailing it in by carrier pigeon at the moment. Okay, there it is.
Look, I understand that his question's about Cleanaway.
My question is, stocks, and
he's trying really hard.
Or should I be waiting to see that break through the trend line?
All right. Should you wait to see it break through that high? So I just caught the last part of it. Looking at the stock at the moment, it looks beautiful.
Away, yep.
On your screen right now, you can see that there on the left-hand side. You can see how it's in a really nice trend moving up. It's just lovely. I think it looks amazing. I think long-term it looks like it should, continue to rise. The risk is when stocks break out of such huge resistance, which it has experienced resistance. I'll just bring up the monthly chart here. You can see all the way across there. I mean, it's broken through that, but there could be a little bit of resistance here. So it'd be just nice to see it close at the end of the month nice and strongly up, but I like it. I think it looks nice.
It's a beautiful trending stock, isn't it? It really, really is a good trending stock.
But it can be quite volatile. That's what people, you know, you might be deceived when you're first looking at this share thinking that it just trends lovely. But when you look at it, the weekly chart, it is quite volatile. And I'll just give you an example of what we've got here. You can see the pullback is in the order of around 20%. Now, most stocks will pull back somewhere between 5 and 15% when they pull back on most falls. Some can go a little bit more depending on the volatility, but this one seems to be more or less around that 14 to 20%, but that could just be post-COVID. It's just settling down after what's happened with COVID. So, but now it looks quite nice and I like it. I think it'd be important to set a nice stop underneath it, underneath that rise, just to make sure that you're protected. I'm not saying a trend line would be good for it, but it could work well based on having a look over the history to see how that performs. So I like Cleanaway.
Yeah, I do like it. I do think it's quite a nice looking stock, and I think it's going to do well, and I do think it's going to keep going up, so there's no reason to panic about it right now.
Yeah, okay.
All right, we have a question from Ratul who says, "Hi Dale, what are your thoughts on Cresco Pharma and Medallion Metals Limited?" Now, CPH or Cresco Pharma started moving, and MM8 is a good potential gold miner as the gold price is on the rise. Well, we only cover one stock, Ratul, so we're going for CPH, which is the first one as normal. I only ever take the first one.
Now, I mean, this is a really high risk share to put your money into. So just looking at the chart, people look at that and think, oh, wow, look how high the all-time high is up in November 2017. That must mean that there's a lot of money or a lot of upside to be made, so pick something that's down. And while that's good thinking, of trying to find stocks that are actually on their low side, the risk is that now, to the upside, it looks great because you've had a 290% rise in a week, which is just bizarre.
But how many people captured that?
But then people would have been sitting there because not thinking, oh, this is going to go further if it's gone that far, and then they've lost nearly 100%. So say 80% of that rise has come off the top there. And now it's really just trying to push off that low, but you don't know whether it's going to recover. So that's the challenge with it at the moment. But obviously, I mean, if you know you're holding this stock, if I was holding this stock, then I'd stay with it at the moment. But there were plenty of reasons to sell it all the way through here to get out of it.
Yeah, and look, you know, if the person doesn't tell us, or Ratul doesn't tell us whether he owns it, or whether he's looking to buy it, or whether it's long term, and that's really where it is fraught with danger and it is high risk, because people have bought this stock at this all-time high price when you're up in here, and somebody's paid 47 cents for it, or some people may have. And all of a sudden they've lost a bucket load, and this is because they don't sell, because they think, wow, I've made all this money. I'll make that more again in the next few weeks, and they don't sell as it's falling away, and that's the biggest sin that a lot of people have with these stocks. They just don't know where to sell.
Okay.
And that's what we get. But thank you for putting in the question, or giving us the question, Ratul. Now, before we get into the topic for tonight, if you are enjoying the show, then please hit the like button, give us a big thumbs up now, so others can find the show and enjoy it too. Now, if you are keen on understanding the stock market, then you might like to go to our website, wealthwithin.com.au. There's lots of free articles on our website, and you can also get a copy of my first book, How to Beat the Managed Funds by 20%, for free. All you have to do, just pay the shipping. Okay, now's the time to get into tonight's topic, top 3 banking stocks, best Australian banks for growth and income.
After falling more than 60% from 2015 into their lows in 2020, the big 4 Australian banks are making a comeback, with Wealth Within the bank the best performer so far.
Wealth Within the bank? That's not what you said?
Commonwealth Bank. Be nice to have Wealth Within Bank. Commonwealth Bank being the best performer so far, making new all-time highs and still trading well below their all-time highs. Now, ANZ, NAB and Westpac are those banks that are below the all-time highs. Most people, if you've got a bank, you'll know that. So can we expect the recent growth on these 3 stocks to continue? In a minute, Dale and I will discuss these banks as we analyse which to buy. We'll also get into why bank stocks are good for growth and income.
So much so. Now, bank stocks have been so popular over time as they just provide a good foundation for any portfolio. Now, they've traditionally been considered low risk, and they have the potential to generate some really good growth and income. Now, typically, dividends are fully franked and around 4 to 5% on banking stocks. So depending on your tax position, the franking credits can actually add a lot to your cash return.
For those of you who are unsure of what franking credits are, in simple terms, given that tax has already been paid by the company before the dividend payout, the tax is accounted for in your personal tax return. So dividends provide investors with an income strategy. However, just getting dividends without protecting capital is an unwise strategy.
Yeah, I totally agree with that one, Janine. Now, while many of you may like the banks, as we've seen in the past 6 years, just not everything is rosy for these investments, as banks do fall away, and as much as 60%. So there are definite times to be buying, holding or selling banks. Therefore, when making a decision, it really is important to use proven strategies that suit your risk level.
You may have been watching this show and following our podcast on the Wealth Within website for years and heard us warn investors about the risk with buying and holding any shares without a proper exit strategy. A good example of why this is important is what occurred from 2015 through to 2020 when banks experienced significant declines and, as mentioned, fell as much as 60% from their highs in 2015. This proves that buying and holding any stock can be high risk.
Yeah, too right. Now, just before we get into looking at the charts, let me summarise just a little bit here. Now, banks are generally considered low-risk investments, although, like most stocks, simply buying and holding these shares in the hope that they will rise is unwise. Now, banks also provide good dividend returns with the current interest rates so low. This makes bank right now very, very attractive. So let's now look at the charts of the bank to determine whether now is the time to buy.
All right. So let's go to the charts. We've got Westpac, NAB, CBA and ANZ
well, it's not
lined
a chart,
up.
It's a watch list.
It's still our charts.
Same thing. Okay.
All right, we haven't gone to the graphical chart yet, but we're on the first one. Okay, you're just trying to pick on me, aren't you?
I am.
Yeah, better watch it.
Just getting some of my back from earlier today.
Yeah, okay. All right, Westpac Banking on the top of the list there. Now, I haven't got them ordered. Do you want me to order them?
Oh, that's up to you. You're running the show. You've got the mouse.
I like Westpac actually, and I really like the fact that it's fallen the way that it has, even though people will be saying, oh, that has to be the worst. While it is down at 12.27%, it actually might get to where we were hoping it would get to before the other banks do.
Gotcha.
And that may mean that it'll be earlier to turn because a lot of the people who are going to sell have already sold. So we're keeping an eye on Westpac for the time being, but NAB's actually done really well.
Yep, in the 2 weeks of this month, yep.
So NAB's actually up 0.63 because we're only early days for the month yet, but it's not down at the moment. Commonwealth is the top performer, up nearly 4% there. And ANZ is actually down 0.82%. So ANZ's been travelling sideways, and one of the callers asked about ANZ earlier, so we're going to have a really good look at that now. So let's move on to ANZ. So you can see, I should just briefly mention the market capitalisation of all the shares on the right-hand side.
So much bigger.
So you can see the size difference there. But to me, that means that there is room for those other banks to actually take on something else. So they could take over something.
So Commonwealth's been the biggest performer this year, this calendar year. Yep. So therefore, it's probably finding a high right now. That would be my guess.
I think you're right there. So let's just have a look and see what the chart shows. So you can see there on the screen, you've got on the left-hand side, the monthly chart. For those who are new to the show, we always look at the big picture as well as looking at, and have a bird's eye view as well as looking at the short term.
Doesn't it?
Yeah, I like the way that ANZ is setting up. And I think that they've actually really timed their buyback well, ANZ. You know, looking at it, there's huge resistance across there. I mean, it's amazing to me that we're actually not through the pre-GFC high. And how is that even possible, you know, considering what was going on around that time.
Well, that's basically backs up what we were saying. You can't buy and hold banks.
That's right, because, I mean, look at the decline in the GFC and then we've had these huge declines since. But if we're looking at what's really gone on here, if we're seeing the GFC pullback, we can see there it was in the order of 60%. So we've just seen this huge pullback for ANZ, which ANZ, this was into the COVID low, another 62%. So it's not out of the question for banks to do this and literally wipe out the returns of the prior 10 years, which is what it did here. I mean, in the case of the GFC pullback, it wiped out the returns of around about the 10 years as well. So it's just something to bear in mind, but I think that the banks are going to get through this sort of pattern that's unfolding at the moment. And I'd like to see ANZ get above this sideways consolidation. Ideally, if it pulls back first, that's preference, and I'd still think it looks good even if it does. It's just a pattern thing that we like to see.
Yeah.
But I think the buyback's actually having, you can really see the impact of that buyback on those shares and holding it up at the moment.
Yeah, I think once it gets through that sort of that $30 mark, I think this is heading right through to that all-time high and possibly through it, or that high of 2015 at least anyway, and all the way through it.
Yeah, so ANZ, we like ANZ, a tick so far, but we're not giving away any clues as to which are the top three yet, are we?
Oh, no, okay.
All right. Commonwealth Bank. Now, we'll go to the monthly chart first and have a really good look at the bird's eye view of Commonwealth Bank over the history. Now, Commonwealth Bank has been a better performer over time. It hasn't got stuck and held back by the pre-GFC high. Now, we saw the same sort of decline. When there's a big decline on the stock market, what happens? You're not immune. It doesn't matter whether you're a bank, but we did have a 44% pullback on Commonwealth Bank instead of the order of around 60% that the other banks experienced. So we can see since then Commonwealth Bank's gone on. It's actually gone through that prior high. Could be heading to around $114. It might peak out at around about that level. That's what I'm expecting. Could go to 120, but I'm expecting that there's a turn reasonably soon.
Yeah, look, it did. I mean, I'd be expecting it to start to slow down. I mean, I am expecting this bank to really do peak out. I think it's, it has been running really, really well, and I think what you're going to see is there's going to be more opportunities in other banks, so you're going to get shifting of funds into those other than and out of Commonwealth Bank. But hey, look, if you're in it, stay with it at the moment. Okay,
so that's it on the longer term. So we'll just have a quick look at the shorter term perspective of it. You can see it's trying to make new highs, and it's just it's quite slow in doing it. But I mean, while it's a train going full speed ahead, you don't want to stop it, do you? And just let it continue to rise. NAB, looking at the big picture perspective on the monthly chart again, people will probably be fascinated by the fact that we're focusing on the monthly chart when a lot of people tend to focus on what's happening day to day.
They do, don't they? And this is where you see a lot of people make mistakes. I mean, again, this is another really big example of why you don't buy and hold a bank, because you can have bought them back in 1998. Around the same price, or 1999.
Yeah, so what you're saying is from here it really hasn't gone on at all.
No.
You're only making dividends.
You're only making dividends if you're a buy and hold person. Now, these are great. These four banks are considered some of the best banks in the world. They really are. And the Australian banking industry is considered one of the best in the world for stability and, the regulation, all of that sort of stuff. And they've got very good ratings, our banks, in worldwide. So you would think that they would be performing much better than this, wouldn't you?
Yep. Okay, so let's just have a look at what's happened with NAB. So we saw during the GFC that NAB actually fell 64%, so slightly more than ANZ.
Yep, so and CBA.
And CBA. And then I'll just measure from this high here, because this is where the
March, April 2015.
Yeah, that's where the high was pre the Royal Commission, the anti-money laundering and everything that came out. So we see 65% down. So it's a little bit more than Commonwealth Bank, and definitely more than Commonwealth Bank, and more than ANZ by a small margin though. But it has actually unfolded and looks quite nice for the long term as well. So even a bank that has performed poorly can come back at some stage, but it's a trading bank.
Yep.
This is not a buy and hold bank, as you can see, because like Dale said, it's done nothing since April 1999, really, more or less.
Yeah, well, I think we've still got that old mentality, prior 2000 mentality. I don't know, in the 1990s when I kept seeing so many people and around my desk bring in their portfolios, and they all had the banks. They all had Westpac, NAB, ANZ, and they just bought and held for years. And that whole lagging, that mentality, is still happening at the moment. Yet what you're showing us is you can't do that anymore. It's a completely different field now.
But do you know what? I mean, we're in the current environment where interest rates are so low, where the cash rate, is so low, and people are not getting any money. People will turn around and say, well, who cares? Because I can get 4 or 5% on a bank stock.
On a bank stock.
I can't get anything in the bank.
Yeah, it's better off to buy the bank than put your money in the bank.
And lend it to other people.
Yeah, well, that's true. It really is like that.
Yeah, okay, so, and it's funny, isn't it? Because some people, they're not going to lend it to their relatives, but they're lending it to the bank. But the bank is a secure institution, obviously, but how reliable are your relatives?
I wouldn't trust some of my relatives. It's like give them money and I might not see it again.
Yeah, okay. All right, so looking at this, you can see a nice trajectory there for National Australia Bank in the short term. So it's unlike ANZ, which was stuck in this sideways move with a buyback, but it has gone on a little bit more like Commonwealth Bank, not as fast as Commonwealth Bank, but still nicely moving up. Again, it could have a little bit more to go on the upside, but I still would like to see it have a bit more of a pullback before we get those moves continuing into 2022. Westpac, now this is the one we talked about earlier that's had the fall recently. Quite a significant pullback in the Westpac shares there. But again, the same thing. So we're seeing, you know, prices pre-GFC in 2006. Let's go back to the 90s just so we're doing an equal comparison. Now, this would actually have to be one of the better banks because this is where the performance was of Westpac in 1999. So it's still up, regardless of all the dips and ups and downs, twists and turns. It's actually performed better than the other banks.
Yeah, I would have picked them, you know, prior to 2015, you always would have seen Commonwealth and Westpac, the two better banks, always, and NAB being the worst of those four, of all four of them. But it's, Westpac has been hit hard since 2015, hasn't it?
It has. So I think this pullback provides opportunity is really, and I think we had a caller in too last week who was looking at Westpac and they were trying to buy on the fall. Remember that?
Yes.
And so while, you know, that's a high risk strategy for any particular share, I'd say that it's not as bad
on a bank.
You know, on a bank. You know, I don't like to say it, but, you know, it isn't as bad on a bank generally. So we're just waiting to see Westpac find a bottom and then confirm it's going back up again. And that really needs to happen in, you know, the next couple of months, ideally into 2022. If it can turn around and go back up in December, but I'd say that it's more likely to bottom in around December, January, possibly February. But if retail sales do really well, it's more likely to push our market higher, and the banks have to drive that.
Yeah, correct. I mean, obviously they you know, with credit cards, all the stuff that they're doing, you know, and they really have got they've got rid of a lot of their deadwood nowadays, you know. Now, given that troubled areas,
given that people have saved more generally, if they're working, it's up to you to go out and instead of thinking, oh, well, we're just going to do a really tight Kris Kringle this year. If you've got the money, go out and buy the presents that you think that your family deserve, and then, or relatives or friends or whatever, because in effect, that's going to help everybody, isn't it?
So make sure they're Australian made.
Yeah, well, if they can, that's an absolute bonus, isn't it?
So I'm going to be buying bananas.
Buy from Australian businesses. You're going to buy them a fruit basket, is that right? Basket. You're going to help Costas?
No, how do you find stuff that's made in Australia nowadays? We've sold everything off.
Yeah, so. You can actually, if you look, you can.
Just got to look a little bit harder, but I actually do like Westpac, and I should be biased. I worked for Westpac for about 8 years back in the day, even before it was called Westpac, I worked for them. But to me, I think this has potential. Not now, but I think maybe 3-6 months down the track, I think this has got a lot of potential as well. I think.
Yeah. Now, look, in saying that, a bank can always go lower. So that's the thing to remember. Just because banks are recovering doesn't mean that they couldn't go lower. I mean, people, during the GFC, the thought was that the banks are all recovering. Look at this period. I'll just quickly show you that.
We need to show them the fall from 2015 just to be consistent with the other ones as well. We haven't shown them that.
Oh, okay. But can I just show this reversal here? So a lot of people thought, okay, the banks had fallen. This was February 2010. They're cheap.
Yep.
And off they go, but then we had the tsunami and a whole lot of other things happen. So there can always be outside issues that occur that you can't plan for, but that's why you need to have a proper strategy and a stop loss in place, understand how to set proper stop losses, understand how to apply proper rules. But if you've already got the stocks, don't think, oh, well, I've already got them, they're buy and hold. You still need to have a really good look at your approach and the way you do your management, your risk management. So having a look at Westpac, again from that period, if we go to this high here, so this was the high in 2015, if we're comparing other banks, and we're seeing a fall of 66%. Okay, so it was actually eclipsing the lot in terms of that recent decline.
And it fell below the GFC low.
It did, and look, it's recovered part of that, but it fell 54% in the GFC, so it was actually less than some of the other banks in the GFC. And that was more in line with what the market did, because the market fell at about 55.
Yep. Yeah, correct.
So it's interesting to see that, but you know, all these levels can provide huge support for future rises. Now we just need to see Westpac come back, test support, and then confirm it's going up.
In my latest book, we trade these stocks, all 4 of these stocks in my latest book, and show people how we traded them and got good money out of all of those. So if people do want to look at how to trade these stocks, there is in my latest book, Accelerate Your Wealth, which is that one. So if you do want it, this one you got to pay for. It's not free, where the other one is. So, but if you do want to see us trading those stocks, they're in this book here. We show you the charts and exactly how we've done all of these stocks. So have you got more to talk about on the charts now before I summarise?
Look, I think that's pretty much it. It's just the overall message is about, you know, which banks would we prefer. So in the shorter term, because Commonwealth Bank is quite extended and we're expecting it to peak, we're not suggesting that people pile into Commonwealth Bank at the moment just because of where it is, but there could be some short-term upside. You just have to have a nice little stop loss if you were trading short-term with momentum. The other interesting point is that ANZ setting up nice. Westpac, in theory, even though it's had that fall, is setting up. And NAB's moving on nicely. So if you were going to put your money somewhere, which would be your first one? Not from the point of view of which bank do you like best, but which one do you think is likely to provide the best, you know, opportunity in the shorter to medium term?
Geez, look, I'd have to go ANZ.
Okay.
I'd have to go. My vote would go with ANZ first.
Right, okay.
I mean, obviously Combank is moving up now, so you're going to get still growth out of that.
Yep.
But it's probably only about 10%, roughly.
Okay.
So I think from a more of that sort of medium-term potential, then to me, my thinking is ANZ.
Right.
What's your thinking?
I'm going with Westpac.
You're going with Westpac?
Yep.
Ooh.
So my choice is Westpac, followed by ANZ, followed by NAB.
All right, so there you have it. In summary, our preferences on the banks, it's really like, you know, Janine's picking Westpac, I'm picking ANZ, but I'm sure ANZ above that $30-odd mark. Westpac, as Janine said, she's thinking about it going down for maybe till Christmas time and then take off from there. So just do stay looking at that one for that opportunity, because I also agree with her. I think it will be a ripper of a trade once we get that one. NAB is third, and Combank, if you're not already in it, it's probably best to stay out of that at the moment, because we don't think there's too much upside on that there. But that's it for our topic for tonight. So I do hope you enjoyed it. Now let's get it back into some emails.
Okay, our next email is from Andrew. Hi team, it seems Appen is creeping in the right direction. Do you feel there is enough of an upward trend to consider investing in them? Keep up the great work. Regards, Andrew. Thank you so much for that question, Andrew. And now we're looking at the chart there. So this is another interesting one. I actually like this one too. And I think there have been a few people who have written into us about this one over recent months and wanting to know, has it bottomed yet?
It's always the question, has it stopped falling? Has it stopped falling? Has it stopped falling? Can I buy? Can I buy? You know, because it has fallen huge, hasn't it, this stock? So if we look at the screen, I mean, just looking at the monthly chart, look at the big move from that down there from $43 it fell from that point of view. So looking at this, using your little tool, there's 80%. It beat the banks by a long way.
Why is it my little tool?
Well, you like using it. It can be your big tool if you like.
80.1% from that high, and we've seen a reversal at the bottom, but it doesn't necessarily mean that the bottom's in, does it?
No, it doesn't.
No. So we need to have a bit more confirmation yet before that. Is there anything else that you wanted to say about it, looking at the weekly chart?
Look, it's just really steady, the decline in this one. It hasn't been, there's been some moments where it had some sharp dips through here, but the angle's slowing out. And so if I go and look at my trend line, I'll show you, I just use the trend line tool, but you can see here the angle there. And if I use that tool again, you can see the angles got shallower. So the speed of the fall is slowing, just like we say the other way, with the speed of the fall, the speed of the rise gets steeper and steeper and steeper.
Yes.
The closer more that happens, the closer it gets to a peak. When you're getting this falls getting shallower and shallower, that means we're starting to get more of accumulation through here. So we're starting to see a little bit more volume through here. You can see that's just people are jumping into it, trying to get it cheap, thinking it's cheap. So we're getting some that happening there, which is slowing that fall down at the moment. But this hasn't really said to me it's stopped falling yet.
Yep.
So we do need to wait for it to really tell us it's stopped falling. And yet some people jumped in right through here and thinking, hey, look, I picked the bottom, I picked it at, $10.50 and, getting close to bottom. And they may well turn out to be right.
But it could keep going.
But it could just easily just turn around and go. Yeah. And we could see something like, if I use my little trend arrow tool, you could easily see something like that.
How much is it moving in a week too is interesting. Like in the recent weeks, so the last 3 or 4 weeks, how much is the move in recent weeks, just to understand the volatility and what's going on with the share?
From here?
Yeah, whether it's...
currently up 13, roughly over 13.2, was up 26.5.
So in any 1 week, it could go up, that week that you've got there, it went up 13 or 14%, did it, that particular week?
This one,
16.
Up 16 there,
okay.
And it closed up 15 odd.
So what could it fall?
What could it fall? Yeah, it is, and that's where people go, they see that and they jump into this stock. Now, I'm sure a lot of people saw that and then they jumped in here, and then they're still wondering why they bought, because they really haven't made much money. And so you do see that people jump in too late, they watch for a stock. And this one, we're talking about if it, from the previous week to there, in 2 weeks it went 22.17%. So people would have been watching that and then jumping in through here. And if this comes back down over the next couple of weeks, which is possible, it may not happen, but it is possible, they could be finding themselves in a loss situation pretty quickly.
Oh, absolutely.
And it's pretty uncomfortable. I'm not saying it's definitely going to happen, but...
It looks like a small move on the chart, and that's why I like to show this, because when you have a really good look at it under the microscope, it can tell you a lot about what your risk is.
Yeah, well, so far it's down 4.82% for the week. So, if this closes right down here a bit lower, then it would suggest next week would be bearish as well. But if it closes right up near the top, then it would suggest it might start to move up from here. But just keep watching it. I think I like it.
All right, great.
It's a watch for me from that point of view. But the next question we do have is from Dan. And Dan says, hi, Dale and Janine. Just wondering if you'd be able to take a look at DCC, or Digital X Limited. So happy to do that for you, Dan. I purchased the stock around 5 cents back in July. I did not buy the stock on any technical rules. However, I do allow a small part of my portfolio for speculation or higher risk. On the charts, I've noticed it responds fairly similar to the price of Bitcoin in terms of percentage movement. Just wondering your thoughts on how the stock is looking at the moment, and even if you could compare it to the Bitcoin price chart and see if you notice the links. So basically I took a bit out of his email to make it a little bit shorter, but he was saying they own a fair bit of Bitcoin in their portfolio, or in their business owns a fair bit of Bitcoin, and so what he's saying is when Bitcoin moves, the share price tends to move, and I'm thinking, why would that move? Like, how does that correlate? But I'm not saying it doesn't happen.
But I mean, if you look at the overall chart of this share, this Digital X Limited, for recent years, it doesn't look like Bitcoin to me.
And no, it doesn't look like Bitcoin, so I'm not sure exactly, but that's what he was saying. Do you want to compare it? Because he's noticed it does. And he may be on a daily basis he's seeing that, but maybe the percentage moves are different. I don't know.
So what's your take? I mean, what would you highlight for him to focus on here?
I don't know. I was waiting for your great...
Look, I mean, I guess the fact that the trend is up on this stock looks fantastic. I mean, I think it's looking great. The liquidity is a real concern for it because that is what will give the volatility to the upside, but also the volatility to the downside. So, I mean, you could lose, 20, 30, 40% of your return really quickly in a matter of a week or two, and that's the real risk with it. But at the moment, if you're on it, you'd stay with it, wouldn't you? I mean, it's just gone through that prior high you can see on the monthly chart on the left-hand side, and that looks really nice. In theory, it could continue up to 20 cents. Yeah,
it could quite easily do that, but it's not a hugely liquid stock, so that's what worries me. But the thing is, people get into these stocks and they go, great, it's going up, but then where do you get out of them? And where you get out of them is purely a guess for most people. And it really is almost a buy and pray. Buy, pray it goes up, and if it goes up, then I can just sell it somewhere, magically try and get some money of it. And that's where we have issues with people when they're trading these sorts of stocks. Because we know when we're getting out, why we're getting in, when we're getting in, and when we're getting out. We have rules around that. Yeah. Where a lot of these stocks, they guess at getting in, and then they guess at getting out.
Well, if you guess and get it right, you're doing well, aren't you, on a stock like this?
Yeah, absolutely.
All right. Next is a question from Francois. Oh, fantastic. We've got Francois again. Hi, Dale and Janine. Hope you're enjoying the freedom we have down here in Vic. Dale, do you have plans to do any public speaking events in the next year or so? Can you please look at Harvey Norman for me, the code HVN? I'm keen to trade this stock in a 3 to 6 month time frame. I do not currently own this stock, but keen to get in as soon as I see a possible entry on the weekly chart. Your thoughts would be appreciated. Thank you, Francois. P.S. Still keen on buying you a beer, Dale.
Oh, good.
Oh, there you
I've
go.
only met him once.
Yeah.
I met him once, and that was at a...
He doesn't forget. It's got a good
No,
memory.
he was gracious. He came to a seminar that I did, a public seminar. You couldn't make it that night, but I was there. And
Are you doing any more public speaking?
no. No is the answer. COVID's really sort of stuffed that at the moment. I mean, obviously, we can't do public speaking because it's harder with events. And planning events too, and so there's been really no events to do that. But that said, I am thinking of some stuff, and I know I've briefly mentioned that to you. I've just got to get it through the powers of be, the almighty, of what we want to do. But if things keep improving here in Victoria, I was thinking of maybe running this live show at a venue, inviting people to sit in an audience live, and we do a whole show live once. Would you like to do that?
I'll think about that one.
You'll think about that. Well, if you want it, let Janine know that you want it. But I am thinking about that because we record in the studio, and I was thinking, well, maybe we can come out and meet everybody, you know, and have people in an audience and do the live show for an hour, but do something else for another hour or so, just you and me on stage with everybody else and get to meet
I guess it would be nice to meet everybody, but the challenge is going back pre-COVID. You know, you can sort of think about what life was like prior to that, but then how do we go forward?
Well, that's the truth. That is the truth. So it's not me you got to convince, Francois. It's Janine and
Maybe
everybody
Queensland.
else. Maybe Queensland. You want me to fly everybody to Queensland so we can do the show.
Yeah.
But what do we look? We've got to look at Harvey Norman for a friend.
All
And
right.
I do want the beer, Francois.
We almost forgot about the stock. We
No,
should
the
be
beer's
talking.
better.
All right, looking at the chart there, we can see it's actually corrected really nicely at the moment. But again, this is all relying on those retail sales. If
Yes.
retail sales are good, the banks are going to be good and the retail stocks are going to be performing well. So looking ahead, I would say I'd really like to see Harvey Norman get back above this 560 level to be a bit safer. Right now, there may be an opportunity to buy it, and there may be some more entries over coming months coming up as well. However, would you buy it at the moment, right off that bottom there, after it's just made a new low?
Are you asking me whether I would? Look, I'd have a good look at it.
Depends on your rule.
Well, look, you know, people are still a little bit slow getting out to the shops, aren't they? I know my wife loves it. She went shopping and I got a new tie.
Beautiful,
So you
it's
like my tie?
lovely.
Yeah, but we went to what is it, Burke Street?
So you're helping the economy.
Yeah, we went to David Jones and that, but the shops weren't not many people there. And we went to Westfield and there wasn't too many people there either. I think a lot of people are still gun shy.
Okay.
And this is just Melbourne. I'm not sure what it's like in Sydney or everywhere else, obviously, because I haven't been there for a long time. It feels like a whole lifetime away, doesn't it?
Doesn't it?
But yes, I'm not sure people are going back into the shops at the moment. But then Harvey Norman, you can buy things online, same with JB Hi-Fi, all of those. So, and people are used to that. But also people aren't necessarily going always back to the restaurants and all the eating out in Melbourne too, because whilst we're going to some coffee shops, there's still a lot of nervousness out there. I think it's almost like we're waiting for the next lockdown.
Well, it's not Queensland. We can't all sit outside
We can't sit outside at the restaurant. But I do like it. I think it's starting to show some signs, and I'd like to see it show a few more signs of support there before I get into it. But I think, you know, if we do see that, then I wouldn't be. I'd quite happy to put my money into that one. Yeah.
All right. Fantastic. Thank you for that. Your take on that.
Oh, much okay. So that's it from Harvey Norman. But the next email we have is from a good-looking dude called Craig. He says, "Hi, Dale and Janine, loving the show. I have a question about Dale's second favourite stock." No, he didn't say that. About Life 360. Now, I don't currently own it. Have I missed the boat, or is there still enough upside to jump on board? Thanks, Craig. Now, this is one I spoke about, earlier this year, didn't I?
Yeah, look, I mean, I guess the interesting thing here is first to look at that monthly chart and just have a look at the months in terms of the open and the close and what's been happening. So we've seen it slowly moving up over time. I'm just going to pick a few here. And we're seeing an acceleration that occurred as it started to really get up around that $8, $9 level. I'm trying to just... Yep, 20%. So they're really nice moves each month we're seeing here. Of course, it comes back. But all of a sudden, it's taken off. This big, what we call an outside bar here, is actually 25%. So as the acceleration starts to take off, this is where you sort of say to people, well, you know, do you get in now? Well, I guess the answer is, if you get in now, it's probably extremely high risk. Look how stretched it is in terms of the last 2 months or last month and a half. It's really pushed on, and I think often that can mean it's getting towards a peak.
Yeah, and I mean, going back to my earlier thing when I just sort of drew some trend lines and you can see the angles, it just gets steeper.
Well, these are not trend lines, it's just an angle of the
lines.
trend is what you're saying.
Yeah, I had somebody call in today, one of our students said, you know, the stuff we're talking about on these charts, we're telling everybody what's in our course, you know, and I go, how do we do that?
It's not even close.
It's not even close. You know, we're only just... And somebody only last week said, you know, very high level TA, and it is high level.
It's high level, yeah.
Very, very high level TA.
As in simple down, you simplified it as much as you can so that everybody can appreciate what you're saying.
Well, yeah, because we've surveyed everybody, like we've done numerous surveys on YouTube, and we found out at least 80% of people are more sort of investors. They're not traders. And those who are traders, that next sort of 15%, they're only like brand new traders. They're beginners. They're just dipping their toe in the water. There's very few experienced traders, and again, sometimes like you talked about with the what do you call it? The quote at the start of the show. You know, ignorance. You know, and getting false knowledge. And a lot of people watch some of these videos where these guys will all this stuff on their charts, but what does it really mean? And you know, and people don't understand that much. I'd rather teach people stuff that they can understand and use today, you know, and start making money out of it. And that's
then try to make yourself look good. That's not the aim.
Yeah, it's not about us looking good. We're putting all this whiz-bang stuff on charts to make us look super intelligent. And as I was saying on my market report yesterday, you know, you and I can put stuff on these charts to spin people's heads off their shoulders. All the amount of stuff that we can do that, but is it going to help these people? And the answer is no.
Yeah.
Now, the question with life...
Not when they don't know how to use it.
Not when you don't know how to use it, you know. And I had somebody who sent me an email saying, hey, Dale, I've just read your second book, you know, which is this one, and you talk about a time and price probability box. Can you talk, Janine, and you talk about it on the show? And I went, how do we talk about that without putting the detail in it?
Because you have to have all the bits before.
You've got to have all the bits before.
To get to that.
Yeah, we can draw a box and sort of explain, well, you've got to use time analysis and price analysis and then draw a box.
I mean, you've said to people before that price, time and pattern all have to be coming together to tell you the direction of the stock.
Yeah, and to understand and teach somebody or show somebody enough around a time price probability box, we have to explain it all behind all that. Otherwise, it means nothing to people. Okay. So really, it's about keeping it simple. But that's what I'm trying to do on the chart here with Life 360 is saying.
So what you're showing is that the angle's accelerating. We're seeing the actual rise each month is accelerating, and therefore the potential is that it could be coming towards the top. Correct.
And what I've said a few times, and I say it in my book, and I've said it a number of times on my market reports and everything, when you get more than 3 of these lines, the peak is coming. So his question was, have I missed the boat?
Yeah.
And the answer is, yep. You've missed the boat, mate. You really have missed the boat. Go and look at one of the big 4 banks that we talked about earlier, ANZ or NAB or Westpac. If you like Janine better than me, go for Westpac. If you like me
No, it's not about a vote of confidence in any one of us. It's about choosing a stock that you're comfortable with. So now we have a question from Cam. Hi, Dale and Janine and super fantastic team. Oh, they'll love you for that. Can you please share your thoughts on ASX stock? I am looking to buy it right now for the medium to long term. Appreciate your help and support. Thanks, Cam. Okay, good question. Good stock.
We haven't had ASX for
so long,
have we?
Have we? Okay, so let's get into the charts. So you couldn't change it because I had my hand on that.
I know. I didn't want to touch your hand because that's inappropriate.
Okay. So we're looking at the chart there. You can see that ASX has gone through that all-time high, which looks absolutely beautiful. And I think, you know, if people aren't on this one yet, it's probably too late to do it now. But, you know, you could. I guess, you know, it's just gone through that all-time high. You just have to be prepared for a little bit of volatility when it pulls back, that's all. But looking at it, it looks nice, and I like ASX as a stock.
Is that it?
That's all I think the chart says it all. I don't need to say a word.
No, Cam's taken all that time to type his email and you gave him a 10-second view of it. Like, come on, you can do more than that. Cam, I'm on your side, mate.
Right, what would you like to hear?
a lot more than that.
Okay, Cam, perhaps I haven't been fair to you. All right, let's have a look at this. Because, look, I do talk underwater. That's the problem. I could start talking about this and then I'll be told in my ear to hurry up. All right, so one thing I really like about the ASX is the fact that it has gone through that prior all-time high for the GFC, which shows great things. So ASX obviously being our market, they are actually responsible or look after all the takeovers and mergers and get money when those activities happen, and it's ripe for the taking at the moment.
And there's a lot of that happening at the moment, and we were talking about that late last year about
that's where ASX was really interesting because it actually took longer to take off than a lot of other stocks took to take off. And that actually allowed people to switch from some stocks into ASX when they were selling other stocks and move into this one. So I really like it. It could go up for another few months yet, seeing that there's big news about takeovers and mergers.
Well, I think we're going to see a lot more takeovers and mergers and acquisitions into 2022. I think we're going to see a lot of that as the whole marketplace readjust because of what's been going on, supply chain issues, manufacturing issues, you name it. There's a whole lot of opportunity there for cashed up companies to really find good acquisitions. And I know in times like this, the rich people get richer. It really is. That's just what happens. The rich people get richer because they've got money. They start buying things when there's opportunity from that. And I think there's lots of opportunity in our stock market. And I think we're going to have a good run in 2022 and do really, really well. Yeah, I mean, it looks really nice. I'd have to say that, you still need to have a stop loss on a stock like this. It does trend well when it gets going. Lovely trend, doesn't it? Oh, look, it trends beautifully, and that's what it's the stock that I think when the market's running, and I think our market will do quite well next year. And you can see how it's very smooth through here. Got a bit volatile, but now it's on a nice little run through here, and it's broken through that resistance. But a lot more volume through here. We've got a lot more retail trading happening since COVID. There's a lot of brand new investors in there. I'd still be comfortable taking a profit though when the rules trigger on it. Look, I would too. It's still not a buy and hold stock, but you can see here it is starting to move, and I think there's plenty more upside. I think it'll probably head through $100. Is it something you should be buying now? You've already said the answer to that. No. I'd say no, but I mean, if it has a pullback and then it turns around and goes back up again, there might be a short-term opportunity in there. Okay, well, there you have our thoughts on ASX. All right, if you called into the show and you missed out this week, then keep trying. Tonight we had some issues with our live phone call system. We do apologise for that, and our lines will be back open next week, so be sure to phone in, as we'd love to chat with you. Dale and I have a great time on the show when people call in. If you did miss out, make sure that you write your question down and be back here watching the show next week, as you'll get another opportunity to call in when we give you the cue. So much so, we're really sorry about that, but remember that the best way to have your question answered is to call into the live show between 7 to 8 p.m. every Tuesday. Otherwise, you can email your question to us right now whilst this is fresh in your mind. So you need to send your email through to info@wealthwithin.com.au, and remember to include Wealth Within live in the subject line. Also, show your appreciation for the show and for those who bring it to you each and every week to help educate and answer your questions. You can do this by subscribing to our channel and also giving us a big thumbs up for tonight. Well, that is it for tonight's show. We do hope that you not only enjoyed what we presented, but also received great value from our answers to your questions. Okay, now remember to put this show into your calendar to join us right here on the live Australian Stock Market Show every Tuesday, 7 to 8 p.m. As always, thank you for joining us, and we hope you have a great week. We look forward to joining us again next week. For now, goodbye, good luck, and good trading.